All right. What's up, tycoons? What is up, traders? Super excited for today's video. We're going to take a look at PIP. Okay. This is a viewer request. I do these viewer requests every week. If you want to see your token, stock, crypto, whatever it is in the next video, simply comment down below and I'll get to it as soon as I can. Now, with that being said, we are going to go over the bullish scenario and how this could potentially hit 45 cents on its next leg up if we do make new highs. All right. We're also going to go over the major levels. I'm going to break down to you guys why these are the major levels. You're going to learn about that in this video. We're also going to take a look at the MACD and how you can use this to spot potential entries and exits if you are trying to trade. All right, we're also going to go over something known as bearish divergence, which did cause a pullback. And if we want to get another breakout past our highs, there's something important we must do, and we must break the bearish divergence. All right. And then we'll also go over this chart pattern known as the bump and run. Now, this is something you need to be cautious of, right? I mentioned the bearish divergence. We're also going to go over the bump and run and, explain what that pattern is to you guys. I'm not going to throw you guys blindly into the wolves. As always, this content on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer, right? And we'll go ahead and hop into the video and we'll start off here talking about the bullish scenario, okay? And the reason we are still in this bullish scenario is because we're holding above our major levels here, right? Now, you may be wondering what these yellow lines are and why I'm referring to these as the major levels. What these are is these are the Fibonacci retracements, okay? And you use these for a very simple fact that nothing moves in a straight line up and nothing moves in a straight line down. Rather, you're going to get a move up, a retracement, and then a continuation higher, or a move down, retracement, continuation lower. So it's very useful for spotting that trend continuation, right? You can see we have the uptrend here. We retrace to the major retracement levels, continue that trend, and then we retrace to the major retracement levels again, continue that trend, and we're retracing now, holding above our 50% retracement level on the fibs, okay? So as long as we're holding those Fibonacci levels, there is the chance that we can still continue that trend, all right? And if we were to continue that trend and break out past our previous highs of about 35 cents, we have bullish price targets to the upside of 40 cents, 42 cents, and also 45 cents. Okay, so these will be your three bullish price targets on the next breakout if we do break out and make a new high, getting above that 35 cents level. But there's lots of work to be done before we get there, right? Obviously, okay? We're still in our major retracement levels. And so if we go into the next chart, this is why it's going to say bearish below. Okay. So the reason is, we talked about using the fibs to spot that trend continuation higher or that trend continuation lower, right? You also can use the fibs to spot a reversal, right? So if you move up, you retrace and you start to consolidate and break through those major retracement levels, you can spot a potential downside reversal. Same thing to the upside. If you move down, retrace, consolidate, and then break through those major retracement levels, you can spot a potential upside reversal, right? So when we look at the swing high compared to the swing low, so this is our move down, you can see we've retraced and we're starting to consolidate here now. If we can break out above 0.299 and 0.326, we have the chance of going bullish back above there, okay? And what we want to do is flip these areas to support from resistance, and then we can potentially break past our previous highs. Now, same thing to the downside. We have 22 cents and also 18 cents are going to be the major levels to the downside. If we break below these levels, as you see, we had the previous uptrend, we moved up, we retraced, and we're starting to consolidate here. If we break below those levels right here and flip those to resistance from support, we're going to be bearish below there, and we could potentially see a reversal back down to some of our previous levels that we haven't tested in a while on PIP. Okay. So it's oftentimes, people make things overcomplicated. Some of these strategies may seem overcomplicated, but I'm really trying to simplify things for you guys so you can truly understand price action a little bit more and start to develop and practice these strategies on your own. That way, you can start doing these things on your own. I also mentioned the MACD. This is your moving average convergence divergence. It sounds a little complicated, but essentially you just look for it to spot potential entries and exits using this red line here. So when you see it cross down below, this would typically be known as an exit signal. You can see we got the exit signal up here above that 22 cents level, and we dropped down all the way near 14 cents, right? So pretty significant move to the downside. Then we see the red line here cross back up above this yellow line. Okay, and you can see we had a very strong push to the upside, right? Getting up above 34 cents, crossing that 35 cents region, right? So this is an exit signal when the red line crosses down below. This is an entry signal when the red line crosses up above. And it's not always going to work perfect, guys. There's no strategy that works 100% of the time. And if you take a look here, sometimes things like this happen where the red line crosses down below. And we see that happen right over here. And look what happened. We haven't had a significant move to the downside. We're actually trading sideways right now. And if you take a look, the red line potentially could be starting to curl back up above. Okay. So that's why we have some question marks here. What is the red line on the MACD about to do? Is it about to curl back up and potentially give another entry signal? Or is it going to reject around this area and continue heading lower, right? So this is one of the things that maybe you can potentially use as another entry signal if we do get a entry signal based off of the MACD, right? So we're combining a couple strategies together now. We're using the fibs, we're using the MACD. Let's go ahead and start to combine some more things together, right? And there's something known as divergence on the RSI. The RSI is your relative strength index. This is going to measure the relative strength of a token at its given price. Okay. And ultimately can help, you understand some of the future activity, whether it's bullish or bearish. Now, in this case, a bearish divergence is going to be indicated when the token is making higher highs, right? We have a high here, we have a higher high here. Clearly, token is in an uptrend, right? Well, the RSI typically should be moving with the price of the token, but in this case, we see a high and then we see a lower high. So we're actually making lower highs, losing relative strength as the price of the token is making higher highs and going higher in price. This is a simple term known as bearish divergence, and it's an indicator you could see some type of a pullback. And sure enough, we did get a pullback, right? All the way from that 35 cents region down here to just above 20 cents. Let's just call it 21 cents. Now, we did start to rally back up, but take a look at where we got rejected on the RSI. We got rejected on that initial bearish divergence trend line, and we've started to pull back yet again, right? From 32 cents all the way down to 26 cents, okay? So if we want to go bullish here, what we need to do is we need to break this bearish divergence trend line, okay? If we continue rejecting this bearish divergence trend line, the price of the token is going to continue to head downwards, okay? And it's not just as simple as getting a breakout, okay? There's something known as a look above and fail. Now, this is a warning sign, and this is actually a bearish signal. So for instance, if we were to get a breakout here and we looked above and then failed and came back down below that trend line, this is actually going to be a bearish signal. And the reason being is because the bulls, okay, and buyers are fully presented the opportunity to continue pushing price higher on the breakout of the bearish divergence. And if we come back down and retest that trend line and move sideways, or we move up, that's going to show buyers trying to take control and show that they have control of the price action. But if you get a look above and fail, where we come up and we, instead of retesting and bouncing off of this trend line or moving sideways, and we look up and then we fail down below, that's going to be a bearish signal for the simple reason being that right here, bulls are presented the full opportunity. This is the chance for the bulls to show that they're in control and show that price action is about to go bullish. And if they don't take advantage of that opportunity, it's going to let you guys know that the bears are in control of the price action, that they're the ones who are actually in control. And if we come back down into the range, it's going to be a bearish signal that most likely we're going to continue heading lower in that range. If we take a look here, this is the bump and run pattern that we have currently forming. If you're not familiar with this pattern, okay, what you're looking at is going to be a prevailing uptrend, right? And then you have your bump right here, and the run would actually be a big move down. So it's something you do need to be cautious of, right? We do have a bullish structure. We're still holding above our major levels, but there are some warning signs. We have that bearish divergence. We have the bump and run. And this, if you just Google a bump and run pattern, this is what you'll see, right? You see the prevailing bullish uptrend, then you see a bump where the price action goes up really significantly, and then you break that trend line there and you see a run back down to the lower levels, okay? So that's pretty much it for today's video. If you enjoyed it, smash that like button, subscribe to the channel. Don't forget, I do these viewer requests every week. So if you want to see your token in the next one, just simply comment down below.